good afternoon, everybody. Welcome to an exhilarating journey into the world of higher education financing. I am Harshita, your host for today, and I manage university partnerships for upGrad abroad. It's an absolute delight to have each and every one of you join us on a Saturday afternoon. We are all aware that studying abroad has become an irresistible beacon for students worldwide, offering a wealth of opportunities and experiences beyond comparison. Yet, we understand that one crucial aspect often stands in the way. And what is that crucial aspect? Okay, that is financing your education. That's why we're thrilled to have a remarkable guest with us today, Pratham, the business head at Propel, the future of education funding. He's here to revolutionize the way we approach financing higher education. Propelled understands the profound importance of making education accessible and affordable for students, seamlessly connecting the captivating world of studying abroad with the practicality of financing your dreams. So without further ado, let's dive into this captivating webinar. I'll now hand it over to Pratham, who will navigate us through the exhilarating possibilities that lie ahead. So over to you, Pratham.
Hey, hi. Thank you, Harshita. Thank you for the introduction and my hi to everyone. A very interesting topic. I mean, overseas education and financing that. I have this belief that, the generation that we come from, our parents, we are sort of our nation, we are sort of we are built in a way that, for education, we never compromise. So, you may probably compromise on the quality of clothes, quality of vehicle, house, everything. But education is something that Indians don't want to, compromise, and they want to spend whatever is the maximum that is required. They want to spend it because we believe in that education is of prime importance. But then obviously, as overseas education is something which is a premium education and which may require a premium pricing. And there comes the challenge of arranging the sources, financing those courses. One another challenge is, probably people could have saved this money up and could, break their liquidity and pay it up. But again, breaking your liquidity of such high amount is also risky, because you always want certain amount of liquidity, some certain amount of money present in your bank account. So people always look for financing such big high valued courses or courses for abroad education. Today I'll cover 4-5 points. Let me just share my screen with all of you. And if you can confirm that if my screen is visible to all of you.
Yes.
Okay. So as I was discussing, our point for today, financing your higher ed 100% without collateral. A very interesting subject for today's webinar is finance your higher ed 100% without collateral, because currently a lot of students and a lot of parents still think that it requires a collateral to finance your higher education, which is not true. We are way past the traditional banking, which was there about 20 years back, 15 years back, that where, without any collateral. When I say collateral, it could mean things like your house, your property, or your fixed deposit. Without putting them as a collateral, you wouldn't get financing options. That has changed. India has revolutionized over last 20 years. Over last 6 to 8 years, you've seen a lot of new companies, new banks, a lot of fintechs coming into this space who have disrupted the market. And with their disruption, even banks, NBFCs have now become, have that acceptance that to provide loans without any collateral. So that is something that I wanted to clear to all the parents and students here, that it is not what it was previously, that you would require a collateral. In fact, recently, there are collateral-free loans given to students as high as up to 1 crore rupees. It all depends on sort of, profile that you have, sort of financial prodigy that you have, and the sort of university you're getting into, right? So these multiple factors do play a role in, getting your loan approval. And as I said, anything between, up to 1 crore is also possible.
Well, so that's amazing to hear, Pratham. And we're really looking forward to this. Just one thing I would like to add on before we start with you, the presentation in totality, is that for all the attendees here, there is a Q&A box. So you can add on your questions. Please feel free to add on your questions in the Q&A box, and we'd love to answer them. Yeah, that's it. Thank you so much.
Thank you. Thank you. Okay. So moving ahead, what various loans and financial schemes, like, right? A lot of confusion is because, you know, the sort of products have changed. There are a lot of various loans options that have come in recently in the market. You might have heard of a lot of schemes called as no-cost EMIs or hybrid EMIs. So what are no-cost EMIs, hybrid EMIs, or the loans under no-cost EMIs? A lot of times, some universities or some, you know, platforms offer you no-cost EMI, which means that you don't have to bear the interest. So let's say a loan amount is of 1 lakh rupees, that is 1 lakh is your course fee. They will give you an option to pay that in, you know, 24 or 30 months, and you will end up paying only 1 lakh rupees. You do not have to bear any interest. These are very exciting offers, but, you know, currently they may be restricted to few select universities, few select types of courses. Wherever the university is ready to do this for you, these courses are available. I would say if there's somewhere where you're getting no cost EMI or hybrid EMI. So hybrid EMIs is that certain amount of interest has been borne by your university, and there is certain amount. So it's a subsidized interest rate loan that university is giving you or the platform is giving you. These are very good options. If you come across these options, I would suggest do not miss them, because, you know, everybody, you know, interest is something which, you know, is something that everybody is worried about, and it takes your heart out in paying that interest amount. So I can understand that, and that is why the first point that I've mentioned is about them, that if you are getting no cost EMIs or hybrid EMIs, please go for them. Then there are the traditional education ROI loans, that is rate of interest loan, which can be categorized into two categories, that is secured and unsecured loans. So what are secured loans? Where you give certain collateral, right? A collateral like a house, a FD, any property, any shares. Let's say you have certain shares of some company. So you give them as on lease to the bank. Bank keeps that as a collateral and gives you the loan. So those are traditional secured loans. And then there are other types of loans, which are the unsecured loans, that is collateral free loans, where you do not have to give any security. The bank will do underwriting. Underwriting is evaluating your financial profile, your education profile. So a lot of banks give a good value to your education profile also. Let's interest at 10%, but you're someone who throughout your education shown great amount of, you know, let's say you have been around at 90-80% in your education throughout, then they will definitely reward you and subsidize your interest rate in unsecured loan. So it's always, whenever you're applying for loan, I always say that when you apply to a bank or to anyone for an education loan, always tell them about your education background and make sure that it is in as detail as possible. Let's say if you're someone who is, you know, probably been a rank holder somewhere, let's say you were in your 10th, you had probably certain rank in your state or in your board, do mention that, because there are certain amount of discounts and subsidies given by banks, NBFCs and fintech in traditional ROI loans, which you can tap upon. And this is applicable in both secured and unsecured loan. That, as I was mentioning, again, scholarship loan. Some banks are definitely, some banks for your post-graduation in abroad or anywhere are giving you scholarship loans, because these are government introduced schemes. You can reach out to, these may probably take a higher time in approval, because your application goes through the bank, then process your application to government, and then government provides you a certain amount of scholarship. But these are also a good opportunity that you can definitely tap on. For this, you will have to go and, you know, do a lot of research, find out there are various websites that you can go upon and search about these, or you can go to a nearest branch, or let's say SBI, you can go to nearest branch and ask them about these. The bank manager or the branch manager there is abided to tell you about all such schemes. Then there are end-use defined personal loan. Let's say you are not able to get an education loan or scholarship loans. There are a lot of fintechs in the market these days, or a lot of NBFCs, which may give you a personal loan, but these are defined for end purpose, that is education. Hence, a traditional personal loan may be at 15-16%, but because your end purpose is defined as education, they will reduce that personal, it will be a personal loan, but they will give you at a better rate. So this is also one of the options that you can use. That is, you can say my end use is defined as education. It's not something I am doing for leisure. Let's say I'm not buying an iPhone, I'm not buying a vehicle, I'm doing something to upskill myself. So it's not a leisure. So these personal loans can also be given to you at a reduced rate. Then there's a new trend in the market. Rather than borrowing loans from India in rupee, people are now moving towards taking debts in USD or Euro versus loans in INR. Now, this totally depends on the country you're applying for. Let's say you're applying for USA. There could be a bank or NBFC in USA which could approve your loan. The benefit there is that the rate of interest in Europe or USA is much lower compared to the India's rate of interest. But then there's another catch, that the dollar value is too high. So if you're borrowing at a lower interest rate, but you'll have to pay in dollars. So those Forex conversation cover up for the difference that is there between taking loan from Indian bank or taking loan from a US or a Europe bank or a fintech or an NBFC. I hope these 4-5 points are clear to you about the types of loans that are there for your education in the market. And let's move ahead to our next point. Meanwhile, is there any question that we need to address, or we'll cover that at the end of the session, Harshita?
Yeah, there are a couple of questions in the Q&A box, but I think we've just covered about the various loans and schemes. So, yeah, can you hear me?
Sure, we'll cover it at the
sure.
end of it. Yeah.
So you can also keep on checking the Q&A box, and in case you feel that any question that you'd like to address at that particular moment, you can do that. Please feel free to do that. Yeah.
Right. So very interesting question. One of the questions that I just saw is it possible to get a loan without a co-guarantor? So that can be possible in only one scenario, that you have some sustainable income by yourself. If you have certain sustainable income by yourself, then it is possible. Now, why? Because there are certain risks involved with a loan. Let's say, because there is a fly risk, the bank is here and you will fly to another country, right? And let's say you go to another country, your fees would be paid to the university, but you don't pay the bank in India back and you don't come to India. So whom do they go to? Whom do they catch? That is one of the major reasons that they always ask for a co-guarantor when you are applying for a loan in India. But if you're applying for a loan through a US bank or a US NBFC, probably they can do a loan without a co-guarantor. So if you're someone who cannot have a co-guarantor, co-signer in India available, because you're self-sufficient right now due to any circumstances, look for options of getting loans from a US bank through these platforms who offer loans in USD. I think that would be a better option for you. Another reason this is a good option, because you would be in that particular country. So the bank and the whichever lending companies would have, a control over you, because they know your university, they would know your coordinates where you're staying in that particular country.
So Pratham, I'm seeing a lot of questions. There are different set of questions like what should be the minimum criteria, and like I'm only son in the family, can I take loan, which bank to take loan from? So these are certain questions that I'm seeing. So can we talk about like what is the eligibility criteria and what are the types of loans that you're offering and how the learners can really avail it? If we can talk about that. Yeah.
Right. Sure. So I saw a lot of questions about, how to get 100% loan approved. What is the sort of universities? I would say to get 100% loan or a loan of a upper limit, let's say 1 crore or so, you would have to be taking admission in top 50 universities. So it is very important, whenever a bank approves the loan, they also give an important weightage to the universities that you're going into. I have heard in this industry that if you're going in top 15 or 20 universities of US, the banks don't even check anything else, because they know you're that quality of as a student, right? They just process your application in a days or two's time. That is the importance that is there for the university ranking. So university ranking would be one of the major factor in getting 100% loan approval. Another factor would be is how stable, probably you're not, it's a collateral free loan. So how stable your family income is. Now, when I say family income, it could be a sum of income of your both parents. And if the sum of income of your both parents is something which makes the bank very comfortable, they wouldn't mind and giving ahead 100% collateral free loan to you. But that is something, it's very subjective. If you without being it subjective, if you want directly a point where I could get 100% loan is that you get an admission in top 20 to 30 universities of US, or let's say top 20 to 20 universities of UK, you would get your admissions, without collateral up to 100% of the fees. A few other questions that I'm seeing while we move ahead is which bank to take loan from without collateral. So to be very clear, many banks, public sector or private sector banks are giving collateral fee loans up to 25 lakh rupees of the amount. Then if you want the limit to be higher without collateral, then you will have to move to NBFCs. The NBFCs are non-banking financial companies which borrow from banks and then give it to you, right? So they are ready to take a higher risk. Obviously, they will be charging you a premium. Please understand, whenever a loan is collateral free, the rate of interest is going to be higher than a loan with collateral, because this is definitely, the risk is higher. So the bank accepts a better reward also against that risk. That is why the interest rate would be higher by 1 or 2%. So for when you say which bank to take loan without collateral, you could move on to NBFCs like Credila or Avance. There are many other such NBFCs in the market you can explore. If you put keywords like NBFC giving education loan on Google, you would get multiple such options. Then there are multiple, fintech options that are there right now. So we are in a time where Indian fintech market is way ahead of any other fintech market in the world, right? So if you go to fintech market, there are fintechs like Empower Financing, Leap Finance, Yandan, Propel, and other fintechs who could provide you a loan without collateral as high as up to 35 lakhs. But obviously that would come at a higher interest rate. But yes, another benefit is that, no collateral and fast processes. So a traditional bank, if you have someone who is being to a bank, bank processes take time. It would take up to 30 days to 60 days to get your loan approved. As you move to NBFC, this becomes 20 to 30 days. And as you move to a fintech, the loan approvals are within 10 to 15 days. So that is how it is.
And also,
is there any particular criteria on which?
Yeah. So Pratham, what I was thinking is there are a lot of questions that are coming in, and it's very difficult to answer each and every question at the moment. I believe you have covered everything in your PPT. So let's do one thing. We can do with the PPT first, and I'm noting down all the questions.
So I'll move to PPT about. Yeah. So I'll move to the PPT. What are the loan eligibility, assessment, and collateral options? As I said, one of the major factor in your loan approval is your credit score. Credit score, or in India, what we normally call it as a CIBIL score. So your parents and you, if you have taken any loan or anything, you need to have a very good credit score. And credit score is obviously in India one of the major parameters. So let's say if you are someone who has a bad credit score, it is going to be a very tough journey for you. So let's say if you plan to, study next 2-3 years, you plan to go abroad, or let's say next 1 year, I would say the first step, apart from, starting to prepare for the exams, is to make sure that your credit score improves. If you're defaulter in some of the other loans, somewhere your amounts are overdue, please speak with your parents. Don't be shy in speaking with your parents. And as a parent, please speak with your wards also, that how exactly is your credit score right now, because credit score is going to be one of the major factors. How in a year's time we can improve credit score? You can easily improve your credit score in a year's time by paying on all your loans on time, right? So by the time you want to take the loan, your credit score should be somewhere above 700. 700 is decent. 750 is good, very good. And if you have a credit score above 800, superb, you're going to get the best deals. So again, rate of interest depends on your credit score. Somewhere above, someone who has a credit score above 800 will get the best rate, will get the loan approval quickest. 700 to 800, good credit score, average borrowing rate. But again, your loan will also get approved through some of the other channel. And someone with a credit score less than 700 it is going to be a tough task for you. You are going to be asked to pay a premium interest. So be prepared mentally for that. Because if we are having a credit score less than 700, we are going to be asked to pay a premium interest rate, or probably the bank will not be comfortable giving us collateral free loans. So you have to understand and you have to evaluate yourself as a student and as a parent about the financing options, right? Parents income assessment, a lot of weightage is given to parents income assessment. So if you're someone coming, obviously banks and NBFCs love someone who comes from a salaried class, because it gives them that comfort. Okay, he's coming from salaried class, there is going to be a stable income. So if your parents are salaried class, they would love to give you a loan upfront, without any hassle. Then if you're someone self-employed but with good banking balance, so some people, there are two sorts of people who keep good bank balance in the bank. So for them also it is going to be an easy task. But if you are someone who does not has that bank balance maintained in particular bank, then the bank is going to come back to you and ask you, show us somewhere where you have a liquidity present. That is, you have some savings done. Third point I had already covered, students' education assessment. Banks do look into a factor that, see, in the end, it is you as a student who is going to pay back the loans, right? You wouldn't pass that burden on to your parents. So banks do look into a point that if
I think we have lost you, Pratham. Pratham, I think we lost you for 5-6 seconds. So can you repeat what you said?
Yeah. So I was saying banks do love someone who has shown good education throughout his career, because it shows them that this student is someone who is promising, who is serious about his education. In the end, when bank is giving the education loan, they want to give it to someone who is serious about his education. So someone who will go to any other country, who will upskill himself, get a job and repay the loan. So that is why education is very important. Fourth point we've already covered, university credentials and rank. So not just rank, the university credential also, what are the affiliations university have. See, you have to also evaluate that university that you're applying for is affiliated to that country's board. Let's say when you study in India, you make sure that that university is affiliated by UGC or by certain other bodies, right? So banks do look into that, and you also have to do that due diligence before going to bank for a loan, right? Okay, that particular university is globally ranked and also affiliated by few major countries where you're looking for employment. So you cannot study in a US university which is not approved by US government, because then it would be a challenge for you to get a job in US market. So you need to understand this, and even bank will evaluate this for you and tell you and give you a feedback around this. Now, apart from traditional underwriting, banks also use surrogates to understand the eligibility on approval. So the surrogates can be anything as, let's say you have invested in stock market, your parent has invested in stock market. So it shows them that you're someone who looks after you, who manages your investment very clearly, right? If you are someone who has probably not done good on your traditional education, but for GRE and IELTS, your scores are north of what is a good score. Let's say for GRE, if your score is way beyond what normal people have, or for IELTS, your scores are way beyond what normal people have, then banks do consider this surrogates. These are important surrogates that they consider. If I remember, sometimes I remember a farmer's child getting a loan. And when I asked the person who approved the loan, what was the surrogate that you look for? Being a farmer, you were able to approve his loan. He said that he went to his farm and he saw 10 cows there, right? So that gave them a promise that if he has 10 cows, there is going to be some income that must be coming from that 10 cows, right? So these surrogates, probably bank will not tell you, but they're always looking at it. Let's say you have a house, how well you maintain a house. So someone who will come to your house for verification will also note that how good have you maintained your house. That is also something that is a surrogate, right? So please note that there are certain other surrogates also that bank look into. Probably for those surrogate, you might not face a rejection upfront, but that those surrogates always contribute towards approval of your loan. Let's move on. Interest rates in education loan. One of the most common question people ask is, what is the interest rate I can get? People tell me, vehicle loan is at 8%, but sometimes we are getting education loan at 8.5%. You have to understand there is emotional value to education. It is an unsecured loan by say, because banks do not have, if we are giving collateral free education loans, it is something unsecured. If you don't pay, they don't have anything to recover their money, or they do not have anywhere to go. If it were a car, they can just seize that car and recover some money, right? That is why probably car and home loans are cheaper and education loans are costlier. You have to understand this. Currently, with the increase in, so over past 6 months, the rates have increased, right? If you have heard the news, the government repo rate, RBI has increased the rate of loans. All loans have become costlier. Now, public sector banks, that is SBI, Bank of Baroda, Punjab National Bank, LIC, are offering, loans at 8.5 to 10%. Now, 8.59 would be something that you will get only with a collateral. If you're looking for a non-collateral, it could go up to 10%. You have to make sure, you have to understand that the best rate will only come when you have a CIBIL score greater than 800, when you are giving certain collateral, and your education is also good and your surrogates are also positive. In that case, you can get best rates, that is 8.5. You could also get 8.25 if you're a woman. So there are certain schemes for women's. So whoever if you're a girl who's looking to upskill yourself, you might probably get a better rate due to the schemes that government has offered. So I am just giving you a broader range which average student gets, that is 8.5 to 10. But yes, it could go to 8.25, 8.15 also, depending on the bank. Then comes the private sector banks, your HDFCs, your ICICI Bank, Kotak Mahindra, and everything. There, if you are someone who is very good in academics, who have shown great results, who has been topper, then you can get 9.5 to 10%. But otherwise, they would give you at around 10 to 12%. So you can expect that average rate is going to be around 11.5, 12% that the private sector bank is going to give you. And then comes the NBFCs and small finances bank. Now, NBFCs and small financing banks have more acceptance towards giving collateral free loans. So for your likes of Avance, Credila, and other banks, right? NBFCs that you must have heard of. These are more open and are more relaxed in terms of policy compared to the traditional banks. So they could give you 25, 30 lakhs collateral free loans. They would probably won't have high documentation which a SBI would have or a Bank of Baroda will have. So less documentation is also one of the benefits that you get. The tax are quicker. The NBFCs and small finance bank, as I said, do it in 20 days, let's say. So you get a better tax. So the NBFCs and small financing banks are very important when you're coming close to your admission date. So let's say your visa date is near, your university resumes the classes in 1 month to go. Then you cannot be the one who can negotiate with the public sector bank. Your approach should be to reach and get bank approval from NBFCs, then probably try negotiating on that rate with another bank. That is one thing you can do, but do get an approval first if your admission cycle is coming near. I would say approach public sector banks when you have a time zone of 4 to 6 months from you flying and joining your course, right? And then there is fintech, who have again on the higher side interest rate 13.5 to 17%, but again collateral free loans, another benefit, very minimum documentation, and TAT as low as 8 to 10 days. So I have seen people getting loans approved from tech when they had visa interview scheduled in 4 days. They got their loans approved from fintech and certain amount of balance transferred to their personal account also. We'll cover that in further slides. When can apply? As I said, start as soon as possible. If you're planning to go abroad in next fall, next season, you need to start right now. At least have 6 months of buffer before you're supposed to fly, or because your university is supposed to start the process. It is very important to have that 6 months buffer. Again, another benefit with starting as soon as possible is you will get an approval from one bank or someone in 2 to 3 months. Then you can take that approval offer and roam around with other banks and negotiate. Okay, already I have this offer. Can you give me a better offer, which is good for you? So That is why start as soon as possible. Make application with GRE, GMAT and graduation scores. As the day your GRE, GMAT or graduation scores are there with you, right? Start making application and start pushing your scores to the lender. Tell them I have got this much good score, so I want an approval early, right? There is a requirement of
I think we lost Pratham. So
I think we should wait for a couple of minutes.
yeah,
Wait for him to join, right?
yeah.
Pratham is joining back. Oh, he's here.
hey, hi, sorry, I had certain issue. Can the host pass on the? I'll just share my screen again.
Done.
Hello. Yeah.
Yes, Pratham, can you share your screen?
Yeah. Yeah, I'll just share. Yeah, I'll just share. Thank you. Yeah. Sorry for the disturbance. Let's continue. So a lot of, as I was covering, I hope I am audible now. Pre-visa disbursement requirements. So a lot of countries and when you go through a different country, they might have a requirement of certain balances in your account. So it then comes a requirement of pre-visa disbursement. So pre-visa disbursement is nothing but when your loan is approved, rather than directly disbursing the complete amount to university's account, they disburse certain amount in your bank account before your visa date. So that amount can be there in your bank account, right? So they disburse that in your bank account and they put a lien mark to it. So once your purpose of visa is done, they can collect back that amount back from that account. This is something you have to discuss based upon your country with your lender. A lot of lender have now adapted to this and they do it. Let's say NBFCs like Credila, Avance, Gandan, Empower, everything, they would be able to provide you with this facility. It could be a little challenge with public sector banks in pre-visa disbursement, but currently even they have started to do it. So discuss this. If you have a pre-visa disbursement requirement in your account, you should be able to get it. It's not something which is, rocket science for bank, but they just want to understand the nitty-gritties of it, that why is it required, And as I said, shop with interest offers always. If you have time, you get interest from one particular bank, NBFC, fintech. Just don't stop there. Don't be lazy. Apply for another bank, apply with another NBFC, apply with another fintech, and try to make them compete to have you as a customer, get better rate for you. But obviously that is only possible when you have a good timeline. Don't do this in last 20 days, last 15 days, when you're supposed to get the loan disbursed to the university and you're going to your visa journey. I hope that point is clear.
Yes.
So that's about it from my side. Now I think we can open up for Q&A and other questions.
So Pratham, until now, what I've understood, one major factor that we have before applying for any loan is to keep a timeline in mind and be prepared and apply for that particular loan, keeping 6-7 months in hand and not rush up at the end of the moment. If we are considering interest first, like interest that we are paying and the kind of loan that we are getting, the amount, everything, and so that the process should be smooth. The one thing that is very, very important is that we should keep a good timeline in hand, right? Yeah, perfect. Okay, so one very interesting question that I'm seeing, Pratham, here in the Q&A box is that, we understand that you mentioned that there is a criteria based on the ranking of the universities, and there are certain universities that the banks provide loans. So a learner is asking that, can a learner, like how will a learner get to know whether, so bank has a separate list of universities, like if I'm a learner, how will I get to know that I can apply into this bank and my university's loan will be approved, like the bank will approve for my university? So is there a list that is maintained, like how it goes?
So this is a very nice question. If you have a doubt about, at what place is your university rank, always try to use top 3 ranking providers. So one of the ranking providers globally, if you're in India, you can take rankings from Times Group. Let's say Times Group is a recognized group. If you want ranking, you can take rankings from Washington Post, or New York Times, or BBC. So always look and see rankings from a good publication house, right? If your university has written that we are ranked 7th, but just go and click on that publication. What is that publication? If that publication is someone who is authentic, right, then it has a value. If you're still confused, you don't know where to go, you can go to Wikipedia and see their sources. If their sources seem genuine to you. Now, let's say a Washington Post or a New York Times or a BBC would seem like a genuine source, right? So you always make sure that your source of understanding the ranking is someone who's recognized and genuine, because banks also do not have any other. Each bank has chosen their separate source, right? Say me as a bank, I would believe in India, I would believe only, what the UGC commissions say. For US, I would believe on Washington Post. Now you have to understand that rankings are dependent on multiple factors, placements, fees, faculty, and everything. So every ranking is going to be different, but it cannot be different in a way that one ranking is placing someone at 1st rank and then other ranking is placing them at 26th rank. That is very highly unlikely, right? So compare such ranking publications which are very close to each other. Even banks look them.
Okay, thank you. So for example, I'm a learner and my university's ranking that I'm applying for is like I'm considering QS. So if it is QS 800 to 1000, so what is the scenario in that case? Like, will I get collateral fee? I don't think I'll get a collateral fee loan, but like what will be
the ranking of the university is how much?
QS 800 to 1000. Like just a scenario.
US 800 to 1000. So obviously these are not top 100 and 200 universities. So it would be very difficult, because you have to understand that banks vouch a lot on universities' credibility. So here universities' credibility is below 10-20% for them, right? 800 rank is something that university loses the credibility in bank size. So every loan that is going to be approved is going to be on your own credibility. And your own credibility can only be proven by providing collateral, or by seeing income of your parents, seeing the income stability, seeing your current existing obligations and everything. So it's not that you won't be able to get a rate, but the journey is going to be a little tougher than if it were a top 100, 200 university.
Perfect. So I think there is not only just one criteria that my university should be between 1 to 115, then only I'll get the loan. Even if I'm somehow not falling into that category, I still have other criteria that I can fulfill. And there are other options. There are quite a lot of options that I can apply for. One more question, Pratham, that a lot of learners are asking is, what is the maximum loan amount that a student can avail in case of an unsecured loan?
So I would say if the average of maximum currently is at 30-35 lakhs, right? So most of the banks average in an unsecured loan right now 30-35 lakhs, which was 20-25 lakhs about pre-COVID. But after COVID and with the economy rises now up to 30-35 lakhs, people are giving you unsecured loan. We have seen unsecured loans given up to 80 lakhs, 90 lakhs, 1 crore also. But you have to understand that will only happen if you fall under top 50 or top 25 universities. So if your university is beyond 50 rank, then you can expect maximum of 25 to 35 lakhs.
Okay.
That is probably a sweet range which everyone is ready to explore in terms of unsecured lending. That is unsecured collateral fee loans, which is 25 to 35 lakhs.
So thank you. And one more query. So is there any criteria in terms of gap years? For example, I've completed my bachelor's and now I want to apply for my master's. But in between that, I am a working professional and I've started working after my bachelor's. Now I want to pursue studies abroad and for my master's. And there's a gap of 5 to 6 years in between. So will that also act as an important criteria?
So that is usually not the criteria, but if you have someone who after your graduation has worked, has had a stable income, it's a good sign for bank. So bank will value more and see you as a serious candidate because you're someone with a professional experience. You're quitting your current job here in India and planning to do higher education, which shows that you have a good intent of upskilling yourself, making your life better, right?
Yeah.
Moving to a different country. So that is a positive sign. In fact, if you are while a loan application or any, even with university applications, right? University gives better weightage to someone with work X. The same thing happens in loan application also. The bank, the lender will see your previous income. And so let's say you are someone who's already earning 20-25,000 and now is going for looking forward to go abroad and take another loan. So what they see this is that this guy is someone who wants to earn more in his life. So he will put in his hard work. He's quitting his comfort zone and going for education. That factor, you quitting your comfort zone and going for higher education adds as a value. It's very good. And I would say that don't worry about the gap year. These are not called as gap year. These are called as, your professional years. So that is going to add to your loan approval. You don't have to worry about it.
Great, great. So to all the learners, we are adding in the chat box our links and various social media links and also WhatsApp group for all the webinar attendees. So please feel free to join them. So yeah, and just one more question, Pratham, that if, for example, a learner has already a existing loan, like there can be 2-3 categories. For example, I'm having a bachelor's loan, or for example, I have taken after my bachelor's, I've started working and I have taken a loan for like any of my vehicles or home loan or something like that. Will now, if I have an existing loan and I've been paying it on time, will I get the loan for my master's? Like, will that be accepted?
Yeah. So again, see in this point, your previous loan and for your new loan, your parents would be necessary as a co-applicant and your parents' income would be assessed. So let's say if your parents' income is up to a level which can cover for both the loans, then definitely bank wouldn't have a problem. They would go ahead and approve your loans. Another factor is what banks see is that in your previous loan, you shouldn't have defaulted. Again, coming back to a point, make sure your CIBIL score is very good. Don't default on your previous loans. So if your previous loans history, even if it is ongoing, if it is still, continuing to pay, if the history of repayment is very good, you would be rewarded with another loan. Because what a bank sees it, or we see it as this is someone who is responsible and who pays on time. Obviously, there could be another parameters also. Let's say, we cannot burden you. Let's say you have an income of family income of 5 to 8 lakh rupees. You already have a loan of 4 to 5 lakh rupees outstanding. And then you're taking this unsecured loan of 35 to 40 lakhs. That is going to be a challenge. But I would say don't go into that mathematics. Rather than that, discuss this with all the lenders that they have. They will give you a solution. Probably you will have to take a longer loan. So the longer the loan, the shorter the EMI, right? So if everybody else is going for a 15-year loan, you can say that I am ready to go and take a 30-year loan. I'm just giving you a ballpark example. You can take up to 20, 25 years. Tell them I'll take a longer loan, so my EMI amount will be lesser, that I will be able to pay. So these dynamics will come into picture, but yes, you can still get a loan.
Okay, perfect. And also, just from the answer that you gave, one more question I had is that, suppose my like you mentioned that the parents' CIBIL score will be taken into consideration. So, for example, my parents have retired, and they are not having any income at that point of time. They're not working, and
Hello.
yeah, can you hear us? Are you there?
Okay.
Yeah, can you hear us? You can hear me.
In this case, what will happen is you will have to probably go with a secured loan only. Unsecured loans or whatever asset. Hello.
Yeah. So, Pratham, would I need an additional guarantor also? Like, will that work if I go for the unsecured one?
No, you won't need additional guarantor. If you're giving a collateral, you won't need additional guarantor because collateral is acting as your guarantor. So in this case, I think you should, whenever this is the scenario, make your mind clear. You will have to go with a collateral loan, not a collateral free loan. Okay. Because you also want best interest for yourself. You also want the loan to get approved. So whenever this is a situation in your family, let's say retired parents also and everything, right? Make sure that you go with a collateral loan. Whatever collateral you have, you lease it to the bank.
Perfect. Thank you. So I think most of the questions we have already covered. So in the end, I would say that if you can just summarize the whole session in few points, and if that pointers can be how a student's roadmap should be when a learner is applying for like pursuing master's degree or bachelor's degree abroad, and what a learner's journey would be, and at what time that is the most convenient time for a learner to apply for a loan. Like, if you can highlight that a little bit. Yeah.
So as I said, the journey starts a year and more back, right? So once you're in second year of your graduation, you should start planning, because after third year you're planning to go, or after fourth year you're planning to go. If you're someone who's planning to go for graduation, so once you're in 11th or you're 10th, you should start planning, right? Why? Because you have to discuss this with your parents. See, this is a part of life where all decisions will be interlinked. You with your parent, you also have a responsibility. You're taking loan on parents' name and going abroad, then you have to repay, right? Later stage. So this is a journey. I would say start a year and a half back. Start discussing this with your parents, the scenarios. Speak to your parents. What is your CIBIL score? What is our how is your repayment history like? Tell them that this is a sort of loan that I'll get basis of just of your CIBIL score. Start your journey from there. Between the time while you're studying, I said, know the basics, but don't start application. Starting applications too early also can be a distraction. We want you to concentrate on your scores, get your scores required to, get a seat in your desired university. But the day you get the scores right, use those scores, collect all the financial documents and start applying. Wait for university's approval will come, but start preemptively applying to all the platforms, right? Tell them that I may require a loan between range this to this. You let me know what is my approval limit. So let's say you tell them I am applying to universities between a fees between 20 lakhs to 50 lakhs. And these are my documents. These are my GRE score. What is the approval that I can get? So they will tell you that we will give you 35 lakhs or 40 lakhs of approval, right? That approval is going to be a very good important decision maker while selecting the universities that have called you out, right? So I would say as soon as your GRE GMAT score comes, start applying for loans, because it gives you benefit in multiple factors. You can arrange money for pre-visa. You can go and shop in the market and negotiate on rates. Apart from that, it helps you in decision making of the right universities, because you obviously cannot go to a university asking you 60 lakhs if your maximum loan is 35 lakhs, right? So it also helps in that decision making also. Another point is you're going to get best ranks on 5 factors. Those 5 factors, best interest rate on 5 factors. The university that you have selected, your parents' CIBIL score that is happening, your own education background, the surrogates that are there around you, and the 5th factor is how early you're going to apply. So the people are going to use you if you apply late. Let's say if you apply when it's only 1 month left, everybody is going to ask you 16% only, because they know you are in hurry. So don't be that goat. Apply beforehand, know your approval, because banks and are like sharks who love such customers who are desperate, because in last 20 days they will be desperate. So they love such customers and they charge them premium. I think that was about it. And as I said, there's a lot of abundance of knowledge available on internet. Go and read more and more about this. And I think there are a lot of forums also on Facebook, on other channels, where you will have your peers who have gone in previous years to these universities, these colleges. Take guidance from them also. Those are the ones who were there in your place and who have gone through these journeys. So their guidance will also help you in a way. They'll tell you which bank to go, which fintech to go, what you should do, how much fund you should fund yourself, and how much loan you should take. So those are also good channels to take some knowledge and some guidance from.
Perfect. Thank you so much, Pratham, for such a knowledgeable webinar and sharing a lot of information about the loan. I believe we have answered most of the questions that the learners have asked. And yeah, once again, I would like to thank everybody here for joining in and for this, like, joining on a Saturday afternoon. And thank you so much. And at the end, just wanted to say that that what I have learned from this webinar is one thing that is very important is to be prepared and have certain time duration in hand, so that you can study, you can research, you can speak to people who have already been a part of it, and also have a lot of options in hand. So thank you so much, everyone. And as I've mentioned that in the chat box, we have shared our social media links and also our WhatsApp group. So feel free to join in. And thank you once again, Pratham, and everybody for joining in. Thank you.